Peter Rose, Longwood Currency Trading. It's middle of March, and I wanted to talk about losing is just part of the game. The last couple of videos that I've done, I tracked one that I held for quite a while and made $3,600, and I considered that a loss, not a gain. And I talked extensively about that in that video, which is 2 videos before this one. And then I did another video where I talked about the time value of money and how that integrated with how you view the profits that you have based on time. And this time, and I quoted values, you know, up to that point when I did that video, I was up $2,800 in 3 days of trading, whereas I made $3,600 in 3 months. And so I was trying to correlate the difference in that that amount of money. So I don't want to leave everybody with the impression that traders win, and oh geez, you did $2,800 in 3 days, that means in 60 days you'll make, because it doesn't work like that. Part of the issue is I don't trade a lot, you know, during the week, because because I don't want to sit there in front of the screen all day and trade, and I know when the opportunities are there to trade. And when I get into a period where those opportunities may not be there, I start sifting around for anticipatory type trades. So I don't trade every day as part of my risk management. I sit down and I look at the screen. You know, I can evaluate all the stuff that I need to evaluate very quickly, and if there's nothing there, I'm not trading that day. Things may change. Yesterday they changed quite a bit, for example. I wasn't going to trade, and then it got to be, it was probably about 1 o'clock in the afternoon, and I thought, well, you know, there's some opportunity here. I sat and watched it, and took another $400, $380 or something like that in profit. But then I made the fatal error of sitting there and watching the screen thinking, oh, I've got this, and dropped about $800. So it's not that you win all the time, and it isn't important that you win all the time. It's not important that you lose all the time either. Winning and losing are in a flux with each other, as is everything. Hot water, cold water, it's rainy weather, snowy weather. Whoa, my wife and it just took the bow dog out walking in the back. Let's go out and take a look at that. All right, back in after water coming off the metal roof as I was coming in, and I got soaked. And so here we are talking about wins and losses. You're not always going to win, but corresponding to that, you're not always going to lose either. And so how do you balance that? I've been very upfront on this channel that I don't win all the time. I do lose, but in the aggregate, over the long run, when I'm following my rules, I do fine. I think it's more encouraging for you to hear about the wins and how they were achieved, and my thoughts on the differential of that, because we're all looking at how we can better our wins. We're not so much interested in somebody pouring his sob story out about he took such a bad hit and you know, crying and whining about that. I don't think there's very much video interest in listening to that. But suffice it to say, you're going to have losses. One of the issues in day trading that you have is that you know, I'm looking to make $300 to $600 a day. But is that doable with the size of bank that I'm trading? Yeah. Is $300 a good percentage return on that size bank? If you were trading 3 mini lots or something, probably not. You know, but when you're trading that and you make and you make $300, $300 is a lot of money. It's more than the average person is going to make, obviously, in a day. You know, I think the median salary in the United States today is around $52,000. And I think that's skewed a little bit because there are a tremendous number of people that are making salaries that are not achievable by the majority of the people. But you have a lot of very professional people and a lot of very skilled people that are making a lot of money. And then you have hardworking, normal folks they're doing the work of the country. I don't consider myself, when I was a software engineer, even though the salary that I was earning then was a lot of money, today it's marginal, I guess. It's good. Although somebody who's working today is making 20% more than what I was making. And things are all relative. You know, 10 years from now when you're listening to these videos and I say I made $3,600, you say, what the fuck is that? What good is that? Today, $3,600 is a lot of money, okay? But when you're looking at making a certain number of pips that you're comfortable with, that defines the amount of money that you're going to make based on the size of the bank that you have. So if you're fortunate to have a large enough bank to make $300 a day, that's great. If you don't have such a large bank, it could be $30. Or if you're trading minis, it might be $3. Because it's all proportional, yeah? So that's why I'm an advocate of really honing your craft on the smaller account size. One mini lot, $1,000 bank, which gives you some breathing room over margin. You know, margin on the pound dollar right now is like $700. So if you, on a mini lot, so if you have $1,000, it gives you $300 to play with. If you're trading a mini lot, that's 300 pips you got to lose before you got to reload your account, right? If you're trading a full lot, then the margin is going to be $7,000, and you've got $3,000. It's still the same 300 points. So that margin is important to take into consideration on the size of your bank. You just can't listen to some fool idiot that says, "Oh, I got, I took $300 and I made $700 with it." Well, yeah, but maybe the guy's got 100 or 200 or 300 to 1 leverage, and he got lucky. All these people that are trading on this large leverage, 99% of them get wiped out. The few that survive are like the guy that runs through the minefield and he gets through and then he turns around and says, "Hey, everybody follow me because I know how to get through a minefield." No, you don't. You got lucky. So if you're trading on any leverage higher than 50 to 1, which is the considered maximum in the thinking countries in their regulation, you're delusional. And I just really don't talk with people that call me and say, "I'm trading with 100 to 1 leverage," because I can't help you. I don't want to help you. You're delusional. You're thinking you're going to take that $3,000 account and run it to $30,000. I can't help you. Now, somebody could take a $3,000 account and run it to $30,000, but they're going to have 10 or 15, 20 years of experience to do that. And I can name 2 or 3 people that can do that. But not only can't you do that, they're not going to be able to teach you how to do it either, because there's certain skills that you have to have. You know, you may be able to jump in a swimming pool and swim around, but do you think you're going to be able to jump in an Olympic pool and compete with Olympic athletes? I don't think so. This is be rational and reasonable about this stuff. So when you're looking at how to plan your trading life, okay, not so much your methodology, but your trading life, you have to take into account losses. And that's what your win-to-loss ratio is all about. But before you can start having a win-to-loss ratio, you have to have the skill to make things happen so that your trading is consistent, so that the win-to-loss ratio that you calculate is valid. I hope you're following this. If you're not ready to put money on the line and trade. You need to get some advice from someone who knows what they're doing. Don't try to get this out of a book, because you can't. Book learning will tell you what to do. but it can't show you how to implement that stuff or when to do it. It just can't. I'm a pretty smart guy, and I read all the books, watched all the videos, did all the simulation work in the world. It cost me $40,000 to figure out I wasn't getting the right information, all right? So you can lose your 40 or you can listen to me. You know, and the guys, those of you that don't have a lot of money, I'm able to make some sense to you guys when I talk with you, and I like that feedback. I appreciate the fact that that I'm able to help you in certain ways. Most of you can't afford me as a consultant or to do coursework under me because I'm not giving this stuff away. It cost me $40,000 to learn what I learned. So you can either pay the $40,000 to learn it on your own, or you can pay me whatever amount of money that I'm asking, or somebody else. I mean, you might like my videos, but you may not like me as a teacher because I'm a hard-ass prick. I taught martial arts for 50 years. I don't take any excuses from anybody. You want to learn something, this is the way you got to do it. I'm not the teacher for everybody that's out there. But that's why I charge more, because I think I'm better, because I'm an educator. I know how to do that. But what I'm trying to help you with in these videos is how to figure out how to do this stuff. And you have to be reasonable about the losses that you're going to take. How do you manage your losses? And the secret to the thing, and it does take mentoring to get somebody through that, but the secret to the thing is don't get involved in a big loss to start with. Just take the loss. Set a hard and fast rule. Don't give the price room to breathe. You know what? Giving the price room to breathe means that you don't understand your entry analysis. The entry analysis is the key to the whole thing. If you can get the timing right, the when part, and that price begins to move in your favor, lock that in. It's going to go against you 9 times, but you don't lose any money. But in 9 times, don't you think you'll figure out, oh geez, I'm jumping the gun too early here on this. Maybe I'll just wait a little while. Instead of trying to get 15 pips, I'll be happy to get 8 and let that price go up and prove that it's moving in the direction that I want it to, not because of hope, fear, and greed or whatever it is that I'm doing, right? And so by setting that short stop, you will lose a lot. If you're a beginner or you're learning, you're going to lose all the time. Are you going to lose, if you're trading a mini lot, are you going to lose 300 times? I don't think so. Don't you think you'll be able to figure out after 100 times you lose $100 and you'll go, geez, you know why I'm making money now? It's because I take that short stop, but I've improved my trade entry analysis, and guess what? Now I've got a valid win-to-loss ratio. So now I can trade unafraid. You know, in James Michener's famous book, Centennial, and Pascal is the guy that goes across the forest and stuff, and he meets Indians and he trades with them, and he comes into harmony with the nature around him and the Indians. And when he first comes to the Indians, he says, my name is Pascal, I come to you unafraid. Isn't that how you would like to come into the currency markets? Hi, I'm Peter Rose, and I'm not fucking afraid. That's the way you want to be able to do that. And the only way you can do that is if you have a valid win-to-loss ratio. How do you get there? Well, that's a complicated process. That's why you take courses or have mentoring done. But you can figure it out on your own, too, if you pay attention. You know, if you're stupid, nobody's going to be able to help you, so it doesn't make any difference what you do. You know, if you're incapable of learning, I'm not going to work with you. I'm not going to teach you. I'm going to tell you I can't help you, because I don't want your failure and you blaming me. I'd like to have you be a success. I don't care how much money you want to pay me. If I think you're an idiot, I'm not going to fucking work with you, because I don't need you going around saying, well, Peter Rose doesn't know what he's doing, when it's you that's stupid. I don't need that. And you don't need it either. When you sit down to consider that you're going to do currency trading and play in the tall weeds with the big boys, then treat it as a business. Manage your risk correctly. And just understand that losses are part of the game. You can't say, oh, I've made Well, let's just take in my situation. I got, and it doesn't matter how experienced you are, you still get that feeling. You know, over the last, I don't know, 7 or 8 days, I accumulated $2,800, and I tacked another $400 onto it the next day, which is a few days ago, and then yesterday, I dropped $600, and I should have just dropped two. At the point where I was $200 down, and I have a massive account, and I'm worrying about $200. It's $200 fucking dollars. People don't make that in a week. Some people, and I should have had respect for that. No. It'll be okay. It'll be okay. It went $3,000 against me, and it came back, and I took the $600 and went out. But it was painful because I didn't put the stop on at that point, because when you're day trading, you don't have time to put limits on and stops and all that other kind of crap. You don't have time to think about all that stuff. And I wasn't day trading, I was doing some scalping. And so you get complacent because you win 20, you win 50, and you get to about the end, and you lose 100, and then you're going around, and then you accumulate this, and you've got $400 in gains, and then you go into another trade and you're screwing around and it goes 200 against you. Oh, well, it'll come back and it's 400 and it's 600 and it's 800, and you're going, whoa, what happened here? That's what's going to happen. So with my experience, what did I do? You know what I did? I jumped up 4 time frames, and I go, I'm in a regression to the mean event, and I also have strong resistance at that regression point. And so I'm going to have to let this trade run. It's probably going to run 3,000 or 4,000 against me. So why don't we flip the profit target around, and instead of going for 12 or 15 pips, I'll go for 30. And when I get back down to my break-even point and it's moving in the direction, I'll stage in and go bring my stop down to break even, and then we'll play it on a long run basis, and I'll end up probably carrying this thing for a few days. But that's okay. I don't think it's going to be a 3-month deal. I don't want it to be. I'll just cut it and take $300 or $400 profit so I can get back to trading, because I got caught. It's one of my advices to folks that I chat with, because I'll help people. They contact me and they fill out this questionnaire form, so I get an idea who you are and what your things are, and then we talk about that. We get to do a video chat. We talk about that, and then if you want to do courses or mentoring, then that's fine. We can talk about that too. But the main thing is, maybe I can give you some things to think about up front that would help you, and maybe you'll be fine. And one of the things that I say is, pick the type of trading that you want to do, and don't do anything else. If you want to scalp, don't day trade. If you want to swing trade, don't day trade or position trade. You have to become a specialist. Doctors become specialists, lawyers become specialists, accountants tend to specialize, corporate accounting or personal tax return type stuff. Swimmers specialize. But currency traders think they're better than that. Oh, I'm going to swing, I'm going to position, I'm going to scalp today, I'm going to trade, 16 different currency pairs, and I'm going to do the DAX and the Bund, and I'm going to see what's going on in the S&P today, and I may trade some gold. Really? Those are folks I don't talk to. I wish you well. I give you what advice that I can. But I'm not going to encourage you to take any consulting or take any courses from me. I don't want to work with you. You're just going to be frustrating. I'm retired. I don't need any grief. A lot of the people will be trying to sell you. I'm trying to not sell you. I don't want to have my day filled up trying to drag people across the finish line that are digging their heels in. I don't want to do that. No amount of money is worth that, when I can sit in front of the computer and probably make more than what I would make off them, and then you're going to give me bad vibe juju's back because you're going to blame it on me. I don't know. whatever you think. The crux of the video, other than having you watch my wife and dog run up through the woods in the snow, is to understand that losses are part of the game. And it's how you deal with risk management, which is two things. One is, how are you going to determine where you're going to get out of a trade that goes against you at entry? And two, how do you get the most out of that trade that does go into profit without losing any money? And you say, well, how could that happen? Well, if you start staging in the wrong way to a trade and it goes against you, you lose money. You can lose as much money on a stage as you can. And you guys that are over in Europe, let's just say not in the United States, you better be really careful about the people that you are watching that are over there that are telling you that you can trade by peeling off parts of a lot that are lots earlier than the latest that are later than the earlier lots that you put in. Let's say you're staging in, and you're going long. You stage a lot in at 10, and then you stage another lot at 20. And then you say, well, I'm going to peel a little bit of money off of this one here that's at the first one, or the second one that I put in at 20. I'll peel a little bit off of that, and I'll keep the other one running. No. You can get away with that in Europe right now, but you can't do that in the United States. And there's people that are teaching that. They'll have 10 or 15 open positions, and they'll all be going blah, 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 like this. And they go, well, we'll close this trade, and we'll close that trade, and we'll close. No, you can't. You can't close that trade. It's called FIFO. You got to know the rules of the game. And so part of that risk management is understanding things like FIFO. And how are you going to stage those positions in? When you decide to back the truck up because the position's really going in your favor and you're trying to take advantage of that, exactly how do you do that? When do you back the truck up? If you wait too long, your average cost goes way up, and it takes just a minuscule downplay, and now you're in a decision point. Oh, I'm in a loss, and I got 5 lots on this thing, and they go, oh. Got to be very, very careful. So you have your risk management in two places. One's at the entry level where you're trying to judge your stop loss. They call it a stop loss from entry. If you're just putting a stop to close your position out after you're in profit, then you just go, it's a stop limit. That's it. You need to learn your definitions. So you have those two areas of risk that you need to understand in order for you to get this win-to-loss ratio. Of course, the next question you're going to ask, well, what's a reasonable win-to-loss ratio? That's a topic for another time. And I've done other videos on the importance of win-to-loss. You may want to check those out. Or blog posts. I did a pretty extensive blog post on the win-to-loss ratio. You might want to check those out. I appreciate your viewing and your interest and the emails that I'm getting. That's the way to really communicate with me is through email, because I can't answer in any real substance in a comment. Now, in the earlier day, when I was chatting with folks, I could spend a lot of time on the comments, but as my channel gets a little bit larger, and hopefully it doesn't get too large, I'll be able to still make some generic comments in there that might be helpful or give some advice to folks. But generally speaking, you got to understand, if I get 10 comments a day and it takes me 10 minutes or 5 minutes to respond to each one, you figure out the time involved there. And of course, the more comments that I get, the more spammers will get in there and all that stuff. And someday I may have to shut the comments off because I just don't want to deal with all that. If you folks that are serious, they send me an email, and I'm happy to spend time with you. Because it's fun. It's a lot of fun. As you work through the issues that you're trying to solve in this risk management, don't just think about it as risk management. Think about it in terms of the fact that you will lose, but you are totally in control of how much you're going to lose. You can't do it like I'm doing it and talking about it in these videos, because I'm I trade a little differently. I'm trading with more money than you probably are trading with, and that gives me more flexibility to do things. I also have more experience. You know, like I just casually said, well, I think I'm running into a regression of the mean thing and it's going to bump into support and I may have to take a $4,000, it may go $3,000 or $4,000 against me, this particular position, in order to, before it flips around. What happens if it doesn't flip around? Well, then I'm screwed. Okay, and I'll come back and tell you. But the familiarity with the thing, and I have a good win-loss ratio. Even if I take a $4,000 or $5,000 hit, I go, oh shit, now I got to make that up. Can I make it up? Yeah, I can make it up. The thing that I lose, though, permanently, is time. And the time that I take making up a large loss like that is time I could have been made earning that equivalent amount of money. And so I'm really losing. When you lose like that, you're really losing twice because of the time involved. And that gets all the way back to that video on why I felt that the $3,600 that I made in profits on that trade, I considered that a loss. So go back and watch that video and watch the one that comes after it, and then this one. See if you can correlate all this together. And if it helps you, send me an email. Let me know that you like this stuff, and I'll try to do more of it. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.